Daily market analysis for May 3rd, 2017. We'll look at the indexes, we'll look at the underlying buying and selling pressure, we'll look at some of the setups which are there in the market. The predominant theme in the market currently is the deterioration in breadth. You will see the indexes, the Dow Jones and the NYSE and S&P 500 were marginally up, while the other indexes were down. So if you see the Nasdaq 100, which was down 0.34%, the small cap index was down 0.62%. T2107, which is a breadth indicator, as you can see, it has been going down continuously for last 3, 4, or 5 days, which tells you that the breadth has been deteriorating. Similarly, the Nasdaq Composite also had a negative day, but the breadth on shorter time frame, where the number of stocks, about 40-day moving average, that is again going down, and which you can see also the other way in the market monitor breadth readings, which we track, where we look for moves of various magnitudes: 4%, 25% in a month, 50% in a month, or 17% in 34 days. Now these kind of moves tell you how much is the underlying buying or selling pressure. And if you see currently, there is, like, as least today there was a selling pressure, yesterday also there was a selling pressure, and the trends in breadth are deteriorating every day. So let's have a look at the breadth, and when you have a look at the breadth, what you will find is that today was a negative day. 102 stocks were up 4% plus with high volume, and 191 stocks were down 4% on high volume. As a result, you will see that the 5-day ratio, which is basically a ratio of these 5 days, 1, 2, 3, 4, 5, from here, and this 5 days, and that's 0.74. So more stocks were down in the last 5 days than up, and in the last 10 days marginally up, more number of stocks were up. And if you look at the primary indicator, which is basically tells you the number of stocks which are up 25% in a month, in a quarter, that's 522 and 436. So the spread between these two is narrowing, and you'll see that 51 stocks were up 25% in a month, and 43 are down 43 are down 25%. And similarly, you can look at the other breadth indicators on various time frame, but the real thing really is that you will see that in the last 5 or 6 days, the breadth has been deteriorating. You had like 3 negative days in last 4 days, and there was 1 positive day, which is 129 and 20, while you had 191 stocks, 145, 139 stocks, which are down 4% in the last 5 days. So as a result of that, you will see that breakouts are struggling, and stocks have started breaking down. Many stocks are either pulling back, or some of them are breaking down on high volume, and that's what this represents: high volume breakdown. Just a pullback is a different thing, but when you see stocks after stocks breaking down, that's a sign of breadth deterioration. But however, the primary indicator continues to be in a bullish territory, and markets often can keep going up on lesser number of stocks participating in a rally. The real implication from a trading point of view is to be more selective in selecting your stocks on the long side, and look for opportunities on the short side in stocks which have been holding up well so far, or which have made bigger moves in the last 4 or 5 months. Those are the ones which are likely to break down, and you can have, if you're looking for shorting, then you can start anticipating some of the stocks which are likely to break down, and some of the stocks which are recent breakdowns, they will be setting up for a further downside if this deterioration in the breadth continues. But that's as far as the overall market and the underlying buying selling pressure is. But from a day-to-day point of view, in terms of really making money in the stock market, what you're looking at is setups. You're looking for either a buy idea or a short sell idea, and that's what we are interested in. The only thing is that if you see the market deteriorating, then you have to be more careful in terms of how much money which you have exposure to, or the stops, tightening up the stops. So on the long side, there are 2 possible ideas today. NYT, New York Times, which is breaking out on high volume. You'll see one of the high volumes here. That's a stock which is after earnings is breaking out. Then you have PE, Pieris Pharma, which is basically breaking out on 27.8 million shares were traded. The float is 35 million. So you'll see that there's a lot of shares traded, and it is breaking out on high volume. And as you know, the biotechnology stocks are the one which tends to make big moves. So this one is definitely worth putting on your watch list for buying on a pullback of 3 to 5 or sometimes 10 day. Many times these biotechnology stocks, they have the initial big move and then they set up. There is also a recent biotechnology play which is setting up similarly, which had a big move like this a couple of days ago, I think in the last 10 days, and now it is setting up possibly. So those are the kind of things where you can get a lower risk entry via a stock which is up 52%. If you try and enter with a stop which is like in a very wide, then it can be a problem. So wait for a pullback. On the short side, you had a lot more stocks which are breaking down. Some are weaker stocks which are further breakdown, like your Sunrun, which had a breakdown high volume on the breakdowns. Scorpio, Bulkers, a lot of stocks which had these kind of moves, they are now starting to break down. And this is here first leg of the move. This is a small bearish flag and breakdown, and you see volume was high on this. Similarly, Endo International, which is a pharmaceutical play, which is breaking down here. See, last time, couple of times it had a breakdown here. It had a 30% down move here. It had a 26% down move here. It had like around 11% down move. So stock tends to move, follow through. Just keep in mind the earnings. The earnings is on 5/9/2017. That is in 6 days. The earning is there. So that's like something to keep in mind. Western Union, again breaking down here after a long move. So 5-1. Many of the stocks which have made the move, they are starting to pull back or they're getting into ranges. So that's where the opportunities are. CBB, which is Cincinnati Bell. The sector is weak. Telecom stocks like Verizon and the other stocks are weak in that sector, and stock has had this down move, then a counter trend bounce and now breaking down. Similarly, Aste, then MNK, Mallinckrodt, the drug stock, this is down for a long period of time. So there is something drastically wrong with that particular sector or many stocks in that sector. But hasn't had follow through on a couple of these breakdowns, so I'm skeptical whether it will have a follow through or not. If it has a follow through, this time last time it had a 20% follow through. Here it had a follow through of around 12%. Here it had a follow through of almost like 22%. Here again follow through of around 24%. Here follow through of around, if you take the complete move, around 42%. So there is a potential, but last couple of times it had a breakdown and then buyers stepped in. But the market is changing currently because breadth is deteriorating, so you might get sell off. US Cellular, again, as I said, telecom stocks are down, and so same sector and it's down. So those are some of the shorting ideas which you can look at. Basically, my number one idea is peers, in terms of like this is something to keep an eye on. Put it in a watch list, and once it sets up, this has a potential to make big moves, because biotechnology stocks tends to make big moves, and they made big moves in the last 2 years, 3 years. Every time there has been a rally, especially the small cap biotechnology stocks can make big moves. So overall, the market is holding up very well near the high, but underlying breadth is deteriorating. However, market can continue to go higher with less number of stocks participating in the rally. If you get a 300 plus down day in the on the breadth, or in terms of number of stocks, which is like basically if you get 300 plus day here, then that will be a sign that there are more sellers or aggressive selling is starting. As of now, you're not looking at that kind of a day, but any big days and back-to-back big days, like if you get 300 plus stocks down and you get next 300 or 400 or 500 stocks down, then that will be a sign of big selling. As of now, we are not at that particular stage. So it is slightly tricky for breakouts, but intraday big moves still are happening because of earnings season, and some of those moves for short-term traders can still be traded.